We put out our trading statement a week or two ago, and we said that the business is performing reasonably well. Our inbound volumes are solid, our core economies are performing well, prices on the inbound side are good, and recyclate prices, which were a concern last year, have stabilised. We are seeing a bit of inflation coming into the system, in particular in our market where capacity is filling up, but we're managing that carefully. Integration is going well. Clearly, we had a good year last year, beating our target, delivering 15 million euros against the target of 12. So we came into this year with a good run rate. Now, the first half of this year has all been about doing the heavy lifting, preparing to combine platforms onto one way of working. And on the 1st of October, we had one of our biggest milestones as many of our former Shanks customers in the Netherlands converted onto the Renewi platforms. Now, that's gone really well, and that positions us now in the second half to deliver some of the higher value synergies, such as site closures and route optimization. Well, Municipal is performing better, as we said it would. We're focusing on de-risking and simplifying this business. And during 2018, we've sold the Westcott Park facility, we've sold energy and biogas very profitably, and we've exited the Dumfries and Galloway contract on time. In Canada, we've seen, again, a good performance, a return to profitability. We've had full service commencement in our Surrey plant and an important contractual amendment with our customer in Ottawa. Well, the soil issue is progressing as we said it would. We have a customer pipeline that is now ready and waiting to take our soil. And it's important to remember that our clean soil is an important secondary material in the Dutch market where they're keen to increase use of recycled and secondary materials. We've made great progress with the national regulator in terms of the quality of our soil, and now we're working with the local regulators about finding the right specific applications where our soil can best be used. We're not quite there yet, but this is an important secondary material. It adds value to our customers and to the environment, and it's a question of timing as to when we come back into the market. Debt is exactly where we said it would be when we announced the transaction in 2016. We said that leverage would rise to around 3 times net debt to EBITDA as we paid for the synergies, and then as the synergies come through and as ATM resumes full production, that leverage will fall rapidly. We're on track to deliver the board's target of net debt to EBITDA of between 2 and 2.5 in fiscal year 20, and that remains our intention. We have strong levers to control cash in terms of capital expenditure and working capital, and we're working well within our covenants. Renewi has been executing on its strategy, and we're really well positioned. We're delivering our synergies. We're going to see margin expansion come through from our commercial effectiveness and continuous improvement projects, and we continue to add value through portfolio management. The markets we're operating in are a positive backdrop. There's a strong increase in demand, in particular in the Benelux, our core market, for increased recycling. And that is evidenced just a couple of weeks ago by the Dutch government announcing that they're going to more than double the incinerator tax to 32 euros a tonne, stimulating further recycling. So our markets are positive. We should also step back a moment, 18 months post the merger, and look at what we've created. A great brand, a market leader in the Benelux, performing well and uniquely positioned to meet that growing demand for the circular economy because we control the raw materials that used to be called waste, and we can turn it into products for reuse, meeting the customers and our environmental needs.